Good morning, traders. It's 8 a.m. Chicago time on Tuesday, the 29th of August, 2023. This is episode number 2526. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Quick mic check, please. Just let me know if I'm too close to the mic or if it's popping or anything like that. And we'll move on. Just jumping right into the pre-market summary sheet from Convergent Trading. The overall market posture is mixed, teetering to the negative side here, risk off. But really, we haven't done much since yesterday's close. We're well within one rotation across the board on the U.S. indices as well as the European. The Europeans holding up pretty well this morning. And there's not much news flow here. German consumer confidence is lower than expected, and the French consumer confidence is in line. Best Buy reported today. Best Buy beat its earnings by about 15%, came in at $1.22 versus $1.06 for Q2. Revenue also beat, came in at 9.583 billion for the quarter versus 9.52. The other important ones, really, there's not much else pre-market. But after the close, we get HP. HP is expected to announce 80 cents per share and 12.39 billion in revenue. HP is reporting for Q3, their Q3. There's HP and then there's HPQ and HPE. HPE expecting 6.99 billion and 47 cents. That's pretty much it. China's Evergrande loses $2 billion in value as trading resumes. You remember yesterday I talked about China doing what they can to stem any selling in their stock market, incentivizing traders to come back into the market. I got to comment on this. Lots and lots and lots of controls on trading, speculating, day trading, market making, and so on, individual market making in the Chinese stock market. The stock market's in trouble, and what do? They remove their stock trading stamp tax. They incentivize more traders to come into the market, and they incentivize those who are holding positions from selling. Our function, although many will tell you otherwise, our function as traders is to stabilize the market. That is our primary function, of course. Our function, that's from the market's perspective, our function as traders internally for ourselves is to make money, is to come in here and take the risk, the small incremental risk, hopefully, to make money. But our function to the overall market is to provide liquidity and to provide stability to the market. This is the opposite of what politicians would have you think. So just remember that the Chinese, one of the most restrictive governments on the globe, really is opening up its market and is encouraging more traders to trade stocks and to hang in there, especially if they're not selling. Country Garden asked for more time to repay renminbi bond. This is Country Garden is another troubled real estate. Troubled real estate developer. Toyota's Japan production at standstill as system failure hits assembly plants due to restart. Wednesday, Biden administration to name first 10 drugs for Medicare price negotiation. Now, this has been interesting. This is likely to keep an eye on healthcare and pharma stocks. This is the only real news today, to be honest with you, because the pharma companies have sued and have done a lot to try to stop this from happening. But the Biden administration, as part of its Inflation Reduction Act, is wanting to negotiate the pricing on 10 drugs in the Medicare program. So this is an important piece for them. 3M agrees to pay $6 billion in U.S. military earplugs settlement. We just got Case Shiller uh, just now. Case Shiller came in slightly better month on month than expected. The consensus is 0.6%, came in at 0.9. The prior, though, was 1.5. And the year-on-year pricing, home pricing, is negative 1.2%, expected at negative 1.3, so slightly better. House price index is up 0.3% versus 0.7. That's a good thing for yields. And then everybody's standing by for the JOLTS job openings. We want to see as many job openings get removed from the marketplace as possible, and that's likely to help yields as well. We do get JOLTS job openings and consumer confidence. Consumer confidence expected at 116 today. And then we bunch of other stuff throughout the day, 7-year note auction, and so on. Everybody has a calendar, so I'm going to move past this. The overall condition of the ES this morning is balanced. The same thing in the NQ, balanced. It's skewing to the downside now, but balanced conditions. The ES has traded 151,000 contracts. And the inventory is also balanced. We've basically put in an overnight point of control, pretty much on top of the settlement price. The overnight point of control is 14.40, 44.41 even, and settlements 44.42 and a quarter. Close 44.41.75. So balance as heck is where it's at. We did manage to push above the 50. We struggled with the 44.50 overnight. Did manage to push above there, and the low is at 44.33, still above that 44.30 area from the prior session. So that's where we stand. Pretty light volume, relatively light volume compared to the recent past. Here's what things look like. So I'm going to start out with the TPO chart. Again, the narrative is we've been one-time framing up. We started to establish one-time framing down, right? And then yesterday we gapped up. We opened in a gap right inside of this weak structure that was left behind from last Thursday. And then we checked up, we checked down, we checked all the way back up, we checked all the way back down, and then we checked all the way back up again, and we settled in the middle. Completely balanced profile, as you can see, and not much action yesterday. The delta was pretty much flat, pretty just a poor trade overall. The rotations were kind of interesting. If we look at the active chart here, you'll see that this is yesterday. The yellow here is the IB period. Just disregard that. Let me lighten that up. I don't like how bright that is. So this is the IB here. We had a double TPO high at the IB, so the expectation is by the end of the day this is likely to be breached. And man, we saw the double IB high, we saw it coiling here. This is a setup for long against the at the time was, I think, was 44 with an add at 42, half size, and boom, nice full stop out there. Goes to the other side, breaks the IB on the other side here, consolidates. We trade against the IB low, full session VWAP, which played throughout the session yesterday. And then we have this rip to the other side, consolidates, takes out the double TPO high by 2 ticks, no range extension, and then goes to the other side yet again. Takes out the prior low, 23.75, down to 23 and a quarter, higher low at 23.50, and then walks itself up. And guess what it does now? It goes all the way back to 49.5 to finish in the middle. Yesterday was a poop show in terms of reading price action and reading the auction. I found it very difficult to figure out what this thing wanted, and it looks like most participants did, because if you look at it, we started to mount an attack here right before the open, right? We had that move about a half hour before the open, and then it just fizzled out, and what we ended up with is a delta that's just pretty much sideways for the rest of the session. We saw the same thing in the NQ. The NQ yesterday mounted an attack early on and then just fizzled out, went negative, and just basically flat by the end of the session over here. And we're seeing the same kind of action this morning. There was really no commitment. In fact, if you look at crude, if we look at crude oil, same thing. Just runs up before the open and then just kind of goes completely sideways. Oh, here it is. Runs up before the open and then just goes completely sideways for the rest of the session. Very, very flat delta. There's really no commitment. Now, just to put things into context, not that this is an excuse, but to put things into context, this is the last week for folks to travel. This is actually a very popular travel week because a lot of schools start after Labor Day. Universities start after Labor Day a lot of times. And this is the last chance for folks to travel. So the rest of this week, other than non-farm payrolls on Friday, there's not much really driving things. We look at the calendar and we do have, I covered that yesterday, so I won't cover it today. We had a couple of important releases. We have one in front of us today with the JOLTS, job openings, but tomorrow we have the inflation rate out of Germany, and then after that we have the euro inflation, which ties into what Lagarde was saying at Jackson Hole, PCE in the U.S., and then non-farm payrolls, and that's all she wrote. So overall, nothing magical about this week. Just keep your head, keep your head on straight. Don't get too tied up with any particular trade, and just kind of survive the week is where I'm at. The NQ, same sort of thing. NQ is a lot weaker. The ES came up to about here. NQ opens in a gap, does the check up, does the check down, does the check up, down, and then finishes. Remember yesterday I talked about 15,050, and look at the point of control here is right in that area. So overall, just what we have here is stasis, right? Here's the volume point of control right there, around the 15,050 area. So what we have is stasis and we have balance, and we still haven't cleaned up what's above. So this morning we're opening in range, in value, again. So here's where we are in EES, in range, in value. So this is coiling. Now I want to say, yeah, there's nothing going on here. This is boring, blah blah blah. But this is the stuff that results in big moves. But we don't have a catalyst here right away. But overall, I'm just keeping my hands off the mouse at the open. Looking at the bigger picture, I've compressed all of the profiles going back to the 16th. I've compressed them into one profile. I've kept yesterday separate so that we could see where we are, but you can see that we're pretty much kind of sitting sideways here. The volume point of control is at 44.20. With a secondary point of control at 44.02. If you recall, on the volume 44.02 area, there was a lot going on there, 44.02, 4400. I don't have an indication of what's next here. Looking at the TPO chart, we're still above that 44.30 area. We held 33.50 overnight. Seems to skew for a retest of 44.50. We got the mid-century done yesterday, basically missed it by 2 ticks, and we're kind of sitting sideways. So whichever side this breaks, the pullback is where I'm trading from. I'm not interested in trading the break. So if it pushes higher, pulls back weak, then I'm looking to get long. If it pushes lower, pulls back weak, then I'm looking at the short side, targeting 44.02, and then beyond there, 43.82 or 84, and so on and so on and so forth. So I want to remind you that in an environment like yesterday's, where we have a lot of back and forth like this, there tends to be an urgency to going and changing your time frame. It's like, well, maybe I can look at a 2-tick Renko to see what's going on, right? So maybe there's something in here that I can lean on, maybe some short-term support or resistance. What can I identify in the short term that would help me figure out what to do next? It's very, very common to have this kind of feeling. I'd tell you to resist it. Don't change the periodicity in your chart unless you plan to change it for a while, because volatility has picked up or been reduced. But even though the rotations have increased slightly, there isn't a major shift going on. Avoid trying to be myopic, where you're just looking at the market very, very closely and very tightly. This is a recipe for trouble. Okay, so I don't have much to offer today when I look at the overall view. This is a 30-minute chart. The biggest things I see we have this higher low. We're very likely to go and tackle this prior high. We do have this kind of these 3 tops that we put in yesterday, this kind of a W formation. So to me, it's more likely, given that it broke the one-time framing down, it's more likely to push higher and retest the last high, last week's high at 68.75, than it is to test lower, based on the premise that it had a perfect opportunity to push lower and it just couldn't break down. So it held the 43.65, and the expectation is it's likely to just test higher. Where would I be wrong? I would be wrong if we get back into the range and get below this area down here at 43.90. Then it starts to become really obvious that we are likely to test the 43.65 area. As long as it's holding above 4,400 here, it's very, very likely to test 44.70, and more importantly, the 90-93 zone in here is what's likely to be next. Okay, with 65 being kind of the over-under. So that's what I have. Looking at crude. Crude is in this wonderful kind of nirvana at 80. Crude's balance point now is the 80 right here on the nose, 80 even. What it did is it went below, finished here at the 80. Yesterday it went higher, finished here at the 80. This morning it's opening just slightly higher and is responding to the 80. This is where its balance point is. So crude is in a box. Really is in a box, and it's holding steady, and that box is this basically formed by this profile with the point of control at 80, and things change as soon as we get below the 78.50 area, below this range here. If we get below there, then things are likely to fall quickly. If not, then we're looking for it to push through the 82. Anything other than that is likely to just sit sideways in this balance range. Okay? Hit the like button. If you're not a subscriber to the channel, please subscribe. It helps promote the channel, helps others find it. Hopefully you gain something today. Just be patient, okay? and watch closely for breakouts. Might get a breakout today, but I'm not holding my breath. We'll see what happens.